So people will flee away from dollar as a reserve asset, and what I can see in coming years is gold becoming the reserve asset of choice that central banks will hold the reserves in, rather than dollars. So that in itself will, of course, create a very high demand for gold. And obviously, the market couldn't cope with satisfying that demand at current prices. So we are talking about a major revaluation of gold over time. That's not going to happen overnight. It'll be a gradual process.
In the midst of a global financial crisis of unprecedented magnitude, Egon von Greyerz, the founder of Matterhorn Asset Management, has sounded a stark warning. He believes that the current crisis is unlike anything the world has ever witnessed. Von Greyerz emphasizes the importance of holding gold as an asset that can provide protection against economic turmoil and currency devaluation. The US dollar, historically a dominant global currency, maintained its share of global currency reserves at 58.9% in the second quarter, according to data from the International Monetary Fund. This figure remained unchanged from the first quarter of the year. Furthermore, at the end of 2022, 15% of the world's central bank reserves were held in gold. A 2023 survey conducted by the World Gold Council, featuring participation from 59 central banks, indicated a continuing trend of strengthening gold's role as a reserve asset. Egon von Greyerz has raised concerns that central banks may reconsider the US dollar as their primary reserve asset. Recent events, such as the U.S. confiscating or blocking dollar reserves of other nations, similar to actions taken against Russia, have eroded trust in the dollar's stability. Recent market movements have supported the case for gold. Gold prices rebounded as benchmark U.S. Treasury yields retreated. Gold is holding strong, having reached 5-month highs just a hair's breadth away from the pivotal $2,000 per ounce level. Von Greyerz, however, believes that the true surge in gold's price has not yet begun. While gold has already achieved all-time highs in certain currencies this year, including the Australian dollar, which briefly surged to 3,159 Australian dollars, he predicts that the next movement in gold's price will far surpass current expectations. Before diving into Egon von Greyerz' insightful interview, subscribe to our channel and give this video a big thumbs up.
We have seen most central banks, of course, holding the dollar as a reserve asset. Now, when the U.S. confiscates dollar holdings of other major states, like they've done with Russia and will do whenever they don't like a country with any other country, who the hell wants to hold their reserve asset in dollars that can be confiscated at any time? So people will flee away from dollar as a reserve asset, and what I can see in coming years is gold becoming the reserve asset of choice that central banks will hold the reserves in, rather than dollars. So that in itself will, of course, create a very high demand for gold. And obviously, the market couldn't cope with satisfying that demand at current prices. So we are talking about a major revaluation of gold over time. That's not going to happen overnight. It'll be a gradual process. I don't believe in a reset overnight. I never believed in a reset. Therefore, but over time, as more and more central banks start investing in gold, and we've seen it already in the last few years, central banks are continuing to buy gold, mainly in the East. Most of the Western ones are not buying it, but in the East they are. And that trend is going to accelerate, in my view. The real move, or the real journey in gold hasn't started yet. It's about to start now. And also technically, this last correction that we saw in gold a couple of weeks ago, or just over a week ago, really. That was the final correction of a small correction we're talking about. Remember, and I think now the gold is on its way to a lot higher levels. And remember, gold has been now consolidating in most currencies at the top, at the peak, even in dollars at the peak. Okay, it's not much higher than it was in 2011-12, at that peak in dollars, because the dollar has been strong temporarily, in my view. But in all other currencies, gold has made a new high. So gold is consolidating at a very high level, and the next move, which is starting now, however fast it will be, it could be very fast, is going to take us to highs that no one can imagine. The crowd always waits until it makes headline news in papers and on television. Everybody will pile into gold, of course. And on top of that, as I said, sovereign governments will also have to hold gold as a reserve asset. So that journey is just starting, and as I said, will be a major move.
It was 4 years before the Lehman Brothers collapse, which triggered the most significant U.S. financial catastrophe since the Great Depression, that Ruemaker issued a dire warning to top Federal Reserve officials. Fast forward to the present, and Peter Schiff, chief economist and global strategist at Euro-Pacific, has raised another alarm. He believes the United States is teetering on the edge of an economic collapse, and he ties the emerging financial crisis to decisions made by the Federal Reserve back in 2001. One pressing concern is the towering pile of U.S. government debt, which has now reached a staggering $33 trillion. Equally worrisome is the sharp increase in the gross market value of over-the-counter derivatives. These contracts, which encompass both positive and negative values, surged by 13% in the latter half of 2022, ultimately reaching a year-end total of $20.7 trillion. Amid these ominous signs, the financial expert known as Egon has been sounding the alarm. He contends that the global financial system is dangerously exposed to derivatives and debt. As a result, the specter of a looming financial crisis looms large. In response to these concerns, an increasing number of individuals are exploring investment options in gold and silver as a means to safeguard their wealth.
Add to that the derivatives market. Most financial transactions have an element of derivatives in them, and a lot of transactions have a lot of derivatives in them. I mean, a lot of funds, etc., have no real assets or real paper in them. They have just so you're not talking about only a global debt of 330 trillion or so. You are, and I've written about this. You're talking about, it could be, the total derivatives. Nobody knows what they are, because you have this shadow market and you have outside of balance sheets, etc. But in my estimate, the derivatives could certainly be 1.5 trillion or more, maybe up to 2. And that's really what you're looking at here. That has to unwind at some point. If the debt market comes under pressure, and if the U.S. Treasuries come under pressure. And so if those derivatives will at some point have to be saved, if you want, by central banks, so they will issue even more money to save the banks and to buy derivatives, etc. And that's why, and this is why you see how exponential growth or exponential collapse can happen so quickly. I think we're not there yet, but that can come out of the blue. I don't want to be a prophet of gloom and doom, and I'm because nobody knows what's going to happen, or how it's going to happen, or when it's going to happen. But we do know is that the risk is now at a level where it's never been in history, as far as I'm concerned, because we have never had a crisis. Financial crisis, a debt crisis of this magnitude before. We never had bubbles of this magnitude before globally. It's existed in certain countries in the past, but not across the world. And this is why there's no one to save you. Sure, in the past, if Argentina went under, or some South American country, or some East European country, etc., then it could be saved by other sovereign states. Now there's no one big enough to save. First of all, you got the U.S. No one can save the U.S. The Ponzi scheme is finished, and 2008 was a rehearsal. 2006-9, if you want, was a rehearsal, and miraculously they managed to delay the problem for another few years, or quite a long time, 15 years. But now it's back again, in my view. And this time, I don't believe that money printing will save it. So we are in for a very vicious time now. And as I said, we don't know when. All we know is that the risk is there. It's going to happen. It could happen tomorrow. It could take a year, it could take 5 years or whatever. But the only thing we know is that the people who can, they should try to protect the assets that they have. At least you can't protect everything, your family, etc. It's much more difficult. But nevertheless, I mean, physically you can't. It's not that easy to protect everyone when you are talking about a war. But nevertheless, financially, we can all. Anybody who has a bit of savings can certainly protect it by owning gold and a bit of silver also. You know, this is why we 25 years ago went into gold. We saw gold as the best protection against what was coming, against the risk.
Are we prepared for the challenges that lie ahead? With mounting concerns about the stability of traditional assets and global financial systems, do you believe that considering alternative investment options such as gold and silver is a prudent step towards safeguarding your financial well-being? What are your thoughts on this? If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.